AI wrecking ball, as Carol describes it. Each day, seemingly a new industry selling off, logistics just the latest. Is this oversold? Are investors not understanding what's going on here, or is this warranted?
Well, there is a lot of excesses on the downside, the same way we had excesses on the upside. And clearly, in many of those industries where you can see performance going down sharply on the stock market, there are a lot to do, a lot of opportunities, and yes, a lot of excesses on the downside. That said, we have also to take into account that there is a narrative shift for many of those industries. When you look at the software business, obviously, some maybe financial services companies as well. Clearly, there is a before and an after, let's say 2025, 2026, maybe a before and an after Anthropic. And, the case you could make maybe a year ago about, free cash flow generation, high visibility, identified sources of growth, barriers to entry, sometimes have collapsed. So yes, indeed, some rotation, but some of it is clearly warranted.
All right, so it's not the beginning of a correction in your view as a result of AI and maybe people questioning it?
No, it's clearly more dispersion. Maybe the rising tide will not lift all boats after all, and now you're starting to see some winners and losers. The interesting part maybe about the past few weeks is that clearly the AI losers have lost a ton, and we're seeing that every day, and the correction is extremely sharp. On the other hand, we are not seeing a lot of performance for the AI beneficiaries. And that's probably a question for investors to ask themselves. If you're buying the theory that 2026 could be the year of the acceleration of AI adoption, the year of innovation, the year of, disruptive news coming in and out from those various tech companies, then there is, a positioning to have now where some of those AI beneficiaries are not rallying. A lot of those stocks have derated, and you could argue that there might be an entry point there. At the same time, indeed, playing the rotation away from some of the losers makes sense. So interesting time for investors to assess their strategy.
A company like Apple down 5% today for a couple of reasons. One is the whole market is lower, but also investors are concerned after the company, or the FTC rather, sent a letter to CEO Tim Cook saying the company could be violating the FTC Act if it misrepresents Apple News or violates its terms of service. That has investors a little concerned. Is today a buying opportunity for some of these names?
What's interesting here is that you are not seeing a big shift in terms of the fundamentals. Like the earnings have been strong, the AI story is on, it's been on for quite a few months now. So it's mostly about sentiment, it's mostly about overcrowdedness, it's mostly about rotation, and in many ways it is healthy. Among those large caps tech, though, the question here is the shift in terms of business models. You went from a business model which was capital light, high top line growth, high margin, and capital light kind of business to a capital heavy business with margin compressing. So this deserves most likely some kind of derating in terms of multiple. The question here is, have we derated enough? Today, if you were to summarize, you're basically paying S&P multiple to get into many of those Max 7 stocks. Is it enough? One could argue we are probably closer to the bottom for many of those stocks.
Raphael, one thing I want to ask you, and we are watching headlines in terms of President Trump. He is making some comments in the White House. He's talking about Gaza. He's talking about Iran, the need for a deal. And some other headlines. I'm just looking here in terms of what he's saying. And I just do wonder, how do you roll in the stuff that we get from the White House specifically, and how do you read through what really matters to investors when it comes to the White House? He talks right now he says it will be very traumatic for Iran if they don't make a deal. He said, there's just some different things here that are coming across. I'm just curious, what do you what do you take to heart that might impact the investment climate when it comes to President Trump? And I just think about there's so much happening geopolitically and the alliances and so on and so forth, which will ultimately impact global economies, including the U.S. economy.
Yeah, I mean, this is part of the risk when you look at the risk factors for the market this year. Geopolitics as a whole is clearly a risk factor. And, Donald Rumsfeld used to say there are the known unknowns. So call it Taiwan, Ukraine, tariffs, etc. And there are the unknown unknowns, and we might get some more of those in the coming month. So that's a risk factor. That said, we can say that investors have done a pretty good job over the past couple of years focusing on what matters. And what matters at the end of the day for investors is how the macro is going to react, what are the prospects for interest rates and interest rate cuts from the Fed, for instance, what are the prospects for earnings generation, and making sure that none of that noise from the geopolitics will be affecting this global picture. So far, the market has done a pretty good job at, trying to make the difference between the noise and the reality. There is a lot of noise coming for now. Haven't seen yet much impact in terms of earnings and prospects. The one thing to keep in mind, though, if you think of potential impact for the market, what's going to happen with tariffs is clearly a key focus here. It has been toned down a little bit the past few months.
Right.
The market has kind of moved on from the tariff conversation. If tomorrow we were to have some aggressive rhetoric coming back here, or on the contrary, if tariffs were to be dropped with the impact on long-term interest rate potentially, that could disrupt the market.